Good afternoon. Ira Epstein of Linn and Associates with your metals market wrap-up for this Monday, the 18th of May, 2020, and the time right now just getting on about 5:15 p.m. Central Time. What a day. I got up my usual 4:30 in the morning. I had seen the 60 Minutes interview yesterday with Fed Chair Powell, expected stocks to be higher and metals to be higher, as the Fed basically said they have a whole kitchen sink of options to throw at this market before they even consider negative interest rates. Okay, market up about 200. Then a drug company comes out with a test result on phase 1, Moderna, and they had very good results. They tested 45 patients. Out of it, a shot was done, from what I understand, 2 shots in a 1-month period. And during that time, 8 of the people, from what we see, and I'm not a doctor, the COVID-19 was disappeared in their bodies. So now it moves to phases 2 and 3. Now understand, there's reasons that there's phases 1, 2, and 3. You've got to prove it. Often, from what I've read in different medical opinions now, you get to 1 or 2 at most things fail phase 1. They get to 2, another group gets thrown back. 3, another group gets thrown back. I see what that is, but the market didn't take it that way. The market looked at that and exploded. By about 6 in the morning, 6:30, I was watching CNBC and I saw the interview with the chairman of Moderna, and the markets just started lifting and lifting, and you had a phenomenal rally. So the euphoria that hit the market was, boom, there might be a cure, it's going to be around the corner, blah, blah, blah. Number one, it won't be until 2021, even if it could be proved in a quick manner. You've only got 6 months left this year. Then you've got to run out massive doses. They can't do it themselves. They'd have to license it out. I can go on and on. I'm not a naysayer. That's not what I'm saying. And I do believe there is going to be either a treatment or a cure. And I am not saying this isn't it. But that combination was extremely powerful. Then the euro exploded to the upside as Ms. Merkel and Mr. Macron decided that maybe all of a sudden there should be money given to EU members that need it. 500 billion euros. Big number. Okay. So let's go to the gold and see how it fared on it, because gold pulled back on the news. Initially, gold was up on what the Fed chair said. When the possible relief from a vaccine came on, the gold started spinning down along with the silver. Don't believe me? Look at the timing of it all. I was watching it. So gold settled back down $21. Okay, now remember, we are already into Tuesday trade. I'm trying to do that a lot right now because it makes the charts a little more active for what we're doing. I used to put it out a little bit earlier, but I'll tell you, since I'm at home anyways, I'm here. I don't have to run home. I save all that time, so I'm putting them out a little different. We had our highest weekly chart close at 1750, and we're backing off a little. That's how I look at it. Monday down could lead to a Tuesday bounce. When we look at the chart, an outside day down. So it's important that the market, number one, didn't get back up to these highs. Number 2, another reversal down, could be a trade top that is setting in. As for a swing line top, well, it could be, but again, your pattern is still one of higher lows, higher highs. So these will be what's in play. You'd have to take out now 1692.10 to hurt this market and take out the bullishness of it on the current chart pattern. The first support level comes in at 1718.40. That's where I expect to see fresh buying possibly come in. The resistance was right here. There's no magic in this. You went up to the Bollinger Band on Friday. Tried to extend today, couldn't do it. If you get my morning subscriber video, I was pointing all this out. And Market pulling back. This could be where the setup comes in to get long again, possibly, or this is where the market fails and gets under 1692.10, possibly. What else? Momentum, which had been overbought, and I want to bring you right into this so you get to see it. First challenge of the upper Bollinger Band, very overbought. Theory, it's going to back away on the first test unless you get 2 days in a row of a breakout. Then, like the silver market, and I'll show you that in a moment, you're looking for higher prices. You didn't get it. So I still say you're caught in a trading affair type of deal right here. Market pulling back. I would be surprised to not see the pros reaching out to buy the market. I don't think they'd want to see it under 1692.10. On the upside, they'll be looking again at this upper Bollinger Band, 1750-290. When we step in and we look at the gold-silver ratio, it's still a breakout. Once you got under this level, and we were talking about this all the way here, once you got under that, your next level of sideways action is here. These were all very minor moves. So the market started down, you can see that, and it's continuing that gain against the gold. It doesn't have to go in one swoop, but it could be going back into the 90-95 level. That's what I'm looking at. In silver, you're now on borrowed time. What do I mean? You had your 2 days in a row up for your breakout. Today was the third day. You can go 5, but it's rare. Number 2, the market is trying, if we look at the slow stochastics, let's take away today because we don't know where it's going to be. So you have day 1, backwards looking, both numbers over 80, but not here. So you're in an overbought condition, overbought, got it? That's the best you are, over the upper Bollinger Band. I count each day consecutively over a band or under it, taking away one of those 5 percentage points. So because you've had 3 closes in a row over it, I won't count today, that leaves me with what? A 98% chance that the market will try to close underneath the lower Bollinger Band. If it stays over it today, a 99% chance tomorrow. So I'm looking for a pullback in the market in plain English. I'd like to see what the slow stochastics do. What do I think the pros are doing? I know you think I'm wrong here. I think they're taking some money off the table so they have buying power if the market pulls back. In the copper, this is your first attempt at a move over the upper Bollinger Band. So today on the close, you close 240.40 under it. You're over it tonight. So the odds of staying over it 5% of the time, especially the first time. Look for this market to possibly stay over it, but the odds don't favor new buying coming into this market in a strong manner. I think today was euphoria. I'm not pulling the plug on bias to the upside, but I am saying I think the euphoria might be ahead of itself. In the platinum, you went up to the 100-day average. Now, let's go back to Friday. Here's Monday's action over the upper Bollinger Band. What about Friday? Over it. Breakout to the upside confirmed. So now all I'm looking for is to move under it. I'd love to see an embedded reading to get bullish on. This is because the Bollinger Band didn't hold. This is the number that the pros will again look at is very, very stiff resistance. Could it run higher? It could. I don't expect it. But this is now a base. When we come to copper, it's trying the base. It's not trying to make a peak. Silver, a base. Gold market, a base. That's what's developed in the metal markets. They are in the bull camp until those bases are violated. When we step over to the palladium market, it's not quite in the same camp as the others. It's got a bullish pattern in the sense of higher lows, higher highs. It's knocking on the door of the upper Bollinger Band and the 100-day average. Look for some stiff resistance here, but again, all the metals are bullish. That's impressive to me. Last, the dollar index. Do you see a magnet tied to the 18-day average of closes? Just look at this. One of the things I teach in my charting course is from the 18-day average, trends develop. The second thing, when you see these pipes develop, out of them come big moves. It takes time to develop, but out of them come the moves. While the market's in these pipes, you whip around and most traders get beyond frustrated. They're buying, they're looking for the follow through, they don't get it, they'll sell as the market starts down, they don't get it, and the market chews them up. And that's exactly what's going on here. Momentum has again turned down in this market. You know, we talk about what's going on in the stock market left and right, and for my money, one of the things I tell traders, when you got markets this volatile, how do you cut your trade down? You trade the micro stock indices. They're 1/10 the margin required. So if you have, for example, a $10,000 margin on a stock index, it's 1,000. If the value is $50 on a normal move for a full point, well, that's not what it is on this. Then it's $5 a point. These are ways to get into these markets and build positions where the market doesn't scare you out. And traders have to learn this. Now, we adjust our commissions and our fees and everything for the micro trades as well. So whatever our normal commission, that's not it. A buck a side. If you can't afford a buck a side commission, why are you even in the market? It's that simple. So it's a buck a side plus the exchange and NFA fees. Come on, pretty simple to do it. How do you find out and how do you get started? Call my staff, call them at 866-973-2077. I will send your number on. They will get back to you. You can always go to our website, sign up and say you want more information on the micro stock indices. We'll get that to you. I'm Ira. You have a good day. Talk to you tomorrow.